Welcome to Brunei Darussalam Accounting Standards for BDAS 13, Borrowing Costs. My name is Fatin from Dynamic Technologies and I will be your vocal guide for today. The definition of BDAS 13 is that the borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset should be capitalized as part of the cost of that asset. Some of the examples will be interest on bank overdrafts and short-term and long-term borrowings, amortization of discounts or premiums related to borrowings, and etc. Borrowing cost is divided into three scenarios, which are BDAS 13.1 bank loan, BDAS 13.2 repayment on borrowing costs, and BDAS 13.3 interest on capitalized loan. Further details of each scenario will be explained in the next few slides. Let's get started. Let's start off with BDAS 13.1 to record bank loan. Loan payable is defined as borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset, which should be capitalized as part of the cost of that asset. Let's assume the following scenario. Power Limited started the construction of an asset on 1st January 2017 with a loan of $60,000 borrowed at an interest rate of 10% per annum for 12-month basis. From here, we can extract the accounting entries is debit the cash or account receivable with the amount of $60,000 and credit the bank loan with the same amount. This is a journal entry transaction. Now let's see how this entry is being drafted out in Accounting Plus. A completed journal entry transaction for BDAS 13 is to record bank loan will look like this. Do note the journal ID for future reference. Next is to record repayment on borrowing costs under BDAS 13.2. Interest loan is defined as borrowing costs and interest loan should be recognized as an expense. For example, Power Limited started the construction of an asset on 1st January 2017 with a loan of $60,000 borrowed at interest rate at 10% per annum for 12-month basis. Power Limited made monthly repayment on the borrowing cost assuming straight line method. Following accounting entry will need to be recorded to account for the interest expense accrued will be debit the interest expense or borrowing cost for $5,000 and debit the bank loan for $500. Credit will be cash for $5,500. Completed journal entry transaction will look like this, where debit transactions is divided into two under bank loan secured and bank interest expenses with the amount $500 and $5,000 respectively. Credit will be the cash with amount $5,500. Do note the journal ID for future reference. Moving on to BDAS 13.3 is to record interest on capitalized loan. It is defined as the cost of borrowing and to be capitalized as part of the cost of that asset. Let's assume the following scenario. Power Limited raised a $60,000 loan having interest rate of 10% per annum on 1st January 2017. The loan was specifically raised for the construction of an office building which meets the definition of a qualifying asset under BDAS 13. The construction of the office building started on 1st January 2017 and the construction was completed on 31st December 2017. Accounting entries for this scenario will be debit the office building, which is the assets, with $500 and credit the interest expense with the same amount. This is a journal entry transaction. The draft journal entry of BDAS 13.3 to record interest on capitalized loan will look like this. Do note the journal ID generated from the system for future reference. If you need more help, guidance, or a demo on how to get started, we will be more than pleased to assist you. You may contact us with the following details as shown. Thank you for watching the training video for BDAS 13, Borrowing Costs.